What's good, family? It's your boy Mike back with another video, and in this video I want to talk about the importance of closing candlesticks, man. Let's stop getting faked out by the market, man, and let me really show you guys how powerful these things are and how important it is to understand the combination of structure with it as well. So before we even get into the good stuff, you guys already know what to do. Make sure you please comment, like, and subscribe. Turn on that notification bell to become a part of my notification game to know when I post new videos. I want to stay connected and alerted with you guys as much as I can. Follow me on the Instagram, man, if you want to message me personally if you have any questions and stuff, and I will do my very best to get with you. But other than that, man, I hope you guys are having an excellent day so far, and let's get right into the video. Alright guys, we are on GBP JPY right now, and I really want to show you guys the importance of this, because a lot of times you'll get into the market and stuff like that, especially most people who are less experienced, they'll get into the market thinking that the market is going to sell at this particular area, or thinking that the market is going to buy at this particular area, and then all of a sudden it just starts going the other way. And I want to show you guys exactly what I mean when I say that, understanding the close of a candlestick and orchestrating it with market structure is so important, because you need to know the overall direction of the market. That is primary. If you do not know the overall trend of the market and have that directional bias intact, you are going to get faked out, I promise you. And you need to be able to separate between a counter trend and the actual trend. Okay, so I'm going to show you guys an example. I'm going to take this off so you guys can see. And you see, first things first, you definitely want to have your support and resistance down pat. You need to know where your significant levels on the higher time frames are located. Like so, you see this says weekly high, monthly high, this and that, So you want to scale down your time frames. I say at least go from the weekly to the daily to the 4-hour chart at least. And if you go down to the 30-minute, 15, I mean, you can mark up on the hour, but I can mostly see those from the support resistance. I can see or mark up on off the 4-hour in general. And the daily, I can see daily support resistance. I can definitely see on 4-hour, but you kind of get acquainted with that as you scale down the time frames and determine which one is you're most comfortable with. So right here, we are looking at a nice little area right here, and I want to show you guys exactly what I mean. So let's take this area for example, and I'm gonna go ahead and put an eclipse on this so nobody's confused. Okay, right. So this little area right here, so price ended up buying all the way to this area. And this candlestick was active at first, and then this candlestick formed, and we could tell that from this wick right here, it was bullish for a little bit. Now, some of you guys may have seen the bullish candle right there, and it could have been blue, and all of a sudden you're like, okay, well, let me go ahead, I'm going to go ahead and put a buy at this particular location, and then, because I believe price is continuously going to keep going up. And mind you, now that's what you also have to take into account. You also have to take into account that this is a higher time frame level. Market structure comes first. It's a higher time frame level. This dotted line is a higher time frame level. So when the candlestick is moving, and I want you guys to remember this, there's the difference between active volume and closed volume when it comes to these candles. So if the candlestick is moving at the time, that's active volume. After the candlestick closes, that's closed volume. Okay? When the candlestick closes, now that's where the clue comes in. If it closes, there's a clue. Okay? You always remember that. That's what I like to do. That's what helps me. So if we go down to the hour 1 chart, and I go back to this area, you can see this was a lot of rejection going on. Now it did buy a little bit in that little area that I was telling you guys about, but even so, just from this 4-hour candle, sorry guys, over here messing up the charts on y'all. Just from this 4-hour candle, I would have understood that price has the potential of going in another direction. We're at a higher time frame level, and after this would have closed like this, then I probably would have looked to find entry, because you see this candlestick also went bullish as well. Some people may have thought it was going to buy at this particular location, but after this first candle right here, that's when I would have looked for an opportunity. So let's go ahead and put a line right here so you guys can see it, okay? So I'm going to put a line right there. Oops, my bad, guys. And then I'm going to go down to the hour. And you can see exactly what went on. This area ended up breaking, and just from me being able to scale down the time frame, I would have automatically knew, like, okay, well, because the 4-hour candle is showing me that because the 4-hour candle actually closed bearish, okay, now we might look for something to happen to go in the other direction, and price might have the ability to reverse at this particular location. So then I would have scaled down the lower time frames like so, and I could have dragged this over. I could actually drag this over a little bit more if I wanted to. So if I go over here, I go to coordinates, and let me drag it over for you guys so you guys can see. Okay. So right here, we did have a break at this particular location, and then it came down and it retested. But this whole bearish momentum right here, those two bearish 4-hour candles that we were just looking at was saying a lot. So even when that second bearish candle on the hour 4 time frame started to open bearish, and it started to it started to buy a little bit, but all of a sudden it started to go down and become bearish. Now that's giving me even more confirmation to be like, okay, now price is definitely ready to go in the other direction. So now boom, I'm thinking, okay, now let me scale down to the lower time frames, and let me see if I can find a time frame to where I can scale in an entry real fast. Okay, so I can go down to the 30-minute now, and if I scroll over, you can see exactly what went on. We've seen it a lot clearer now as far as structure is concerned. It broke through, could have got money on the break, came through. This thing went down for at least 50 pips right here, and then it came up, retested right here in this little area. And let's go ahead and put an arrow right here, because I want to show you guys what I mean, okay, for this area. Okay, so I'm gonna go to the back to the 4-hour, and this is how you got to be at the time frame. You just got to be able to rotate and just see exactly what price is doing. Now boom, look at that close. That actually closed like that. After this candlestick would have closed and this one opened bearish for the 4-hour chart, now we see structure is finally coming together. Because now, when I always talk about understanding price when it's making a series of higher highs and higher lows, I want to show you guys what I mean. It's a higher low right here too, and then you can see what was going on, and price made a higher high at this particular location, tried to do the higher low right here, but it ended up coming up. And after this retest right here, after this candle closed, that's when I would have gotten again. After this bearish form, now price has actually made a lower high right here. This is actually a lower low, lower high, lower low, lower high, and so on. So just from that 4-hour structure forming on this area, now price is showing us that it's ready to go in the other direction. So you have to always keep this in mind when you're trading within the market. Remember, the smaller time frames make up the bigger time frame. Especially, I know I explained the session breaks in one of my videos. So every couple of minutes will equal up to an hour. Every couple of minutes will equal up to 4 hours from the lower time frames. They keep going, candlestick after candlestick after candlestick after candlestick, until they finish up with that whole session. All of these time frames are ones, because time is one. Time is one. It's 24 hours in a day. Okay, so this is very, very important. So if we go down to the hour 1 and I go back, you can see that this area was tested. And after this engulfing candle closes, after this one would have closed like this, I would have found an entry right here. I would have found an entry. This is just exactly how you would do it. I would found an entry. I mean, wherever this candle is, like, you know what I'm saying? I tried to get to the middle right here, probably in the middle of that engulfing candle. Stop loss right here, or I could have put it behind this level, whatever your preference is. And then I could have taken this down. I could have taken this down to that higher time frame level, and that's a 2 to 7, really, with that risk to reward ratio. So that's a good risk. But this is what I'm talking about, guys. It's not about finding trade after trade after trade after trade, going from pair to pair to pair. It's not about that. It's about finding the best entry as possible. And when you find the best entry, you want to at least be you want it to at least be, for your risk to reward ratio, 1 to 3, 1 to 4, or 1 to 5. So, if you're risking $100, you want to at least be making 300 plus, 400 plus, 500 plus. So you want to remember that when you're trading, especially for the smaller accounts, guys. Same sort of dilemma. You're looking for the best opportunity to get in the market, but at the same time, you're looking at something that's going to help make you the most money. Okay? So always remember that, guys. That's why the closing of candlesticks is so important, and just waiting for that opportunity to get into the market. After, like I said, after this close, I would have got in on this second candle, or after. That was actually my confirmation. That would have been my confirmation. Or if price came down here and came back to this level, you could have actually drawn. I'm just going to draw a little arrow right here. Could have drawn a little arrow right there. And as soon as price broke through here and came back up to this level, after this close right here, I probably would have got in on this second candle, or I could have just waited for something like this after this close. Then I could have got in on this next candle. The engulfing candles are very, very, very useful, because more than likely price is ready to go into the to the direction that you want if you wait for that candle to close on as the engulfing candle. And usually what happens is, if I see an engulfing candle forming during active volume on the 4-hour chart, usually on the lower time frame charts, I can scale in an entry that way, because now price is showing me that it has a lot of momentum to push in the direction that I'm wanting, whether I'm buying or whether I'm selling. I'll go from 4-hour, and usually if the 4-hour is doing that, then the daily is showing some sort of confluence in that area, and then I can go to lower time frames and find an entry. So right here, I could have got in right there, stop loss above these wicks right here, 45 pips. And you see we did end up going down in direction, so you did end up going right here. Oh shoot. End up going down towards this higher time frame level down here, which always happens. And that was about a 2 to 7, almost 2 to 8. So this is how it goes, guys. Making sure you understand the importance of closing candlesticks is very, very important. This is just how it goes. This is how you will find your entries after the closing of candlesticks, guys. So thank you guys for watching this video. This is a short description of what happens if you wait for the right opportunity to get into the market. Is going to reward you. Being patient and staying in the game. I'm looking to make a risk management video for you guys as well, so you guys can really understand that, one-to-ones, I mean, it's all right, but you gotta do so much to be able to keep building your account. If you just look for opportunities with at least 1 to 3 risk to reward ratio, you're going to be able to make the most money and stay within the game and double your account. So I'm out of here, guys. Peace and blessings to each and every one of you guys. Like and subscribe. And please comment for what other video you want to see. I know a lot of you guys are talking about the super trend indicator. Some of you guys are. But if you want to see anything else, just put it in the comments. But other than that, man, I am out, and I will see you guys in the next video. Peace.